half of America's banks are potentially insolvent, according to a new report from Stanford School of Business. You may not want to hear this on a day when small bank stocks are circling the drain. And the writing has been on the wall, though, since March when the first bank collapsed. It was Silicon Valley Bank, and it started this domino chain. Now, here's the Wall Street Journal explain how and why this seems to be getting worse and not better. It says bankers and government officials had hoped that First Republic Bank's seizure and sale to JP Morgan Chase would mark the end of the banking panic that started with the March run on Silicon Valley Bank. And here's a quote from Jamie Dimon, and he's going to really wish he didn't say that. He says, "This part of the crisis is over." This was on Monday when all of First Republic Bank's assets were just magically transferred into his bank. And I'm sure that sounded good, and it felt really good to him. So he felt confident to tell us all that crisis part is over. And those were what we call in the business famous last words, because today things were getting worse. Now, I'm just going to summarize a little bit from this story. Here's a Stanford story saying that monetary tightening and U.S. bank fragility. And basically, they're making the point that there's a lot of it. They're saying that of the around 4,300 banks in the U.S., at least half, close to 2,300, are insolvent or right on the verge. Here's how they think that risk. This is like, it's not funny, but it's funny. Here's how they think that risk is distributed across the country. It's everywhere. That's worse than a COVID map.
Wow, so Wyoming is okay.
Why make a map? Why make a map or a diagram if it's like, why make a pie chart if 100% of something is in it? You know, like, why bother?
Parts of, I see Lake Michigan or was it Lake Superior is okay. So if you live on Lake Superior, you're fine. Or parts of New Mexico or parts of Idaho.
It looks like Western Texas, possibly. Or, you know, if I don't know, you really have to zoom in. Like some places are okay.
You have to go up to Havre, Montana or like Whitefish. Yeah.
So, yes, they're saying that half of America's 4,800, that's the number I was looking for, banks are already burning through their capital buffers. And they may not have to mark all losses to market under U.S. accounting rules, but that does not make them solvent, according to the report. So they're doing what Al Gore would call fuzzy math. And, by doing so, they can make it look on their balance sheet that's good on paper, but it's not so good. Stanford economists are saying somebody will take these losses. And we have been saying this all along, that, bad financial decisions have a trickle-down effect, and they affect us all. We saw what happened when the government spent like drunken sailors during the pandemic, and now we're dealing with high inflation, as experts were warning. And so now we're seeing if banks are not able to stay in business, that will affect everyone. Now, you may not want to hear this on a day when the stock market took such a big nosedive, particularly with small bank platforms. But the Federal Reserve went ahead to try to continue to sort of put their finger in the dam and increase interest rates by another 1/4 point. Here's that news today. This is the 10th consecutive rate increase, and it will bring the benchmark federal funds rate to a range between 5 and 5.25%. So that's pretty high if you're in the market for a mortgage. That's a 16-year high. All 11 voters on the Fed Reserve board voted for this. There was nobody who dissented. Everyone thought this was a great idea. And now they're hoping to see market growth, but they won't see that in the small banking industry. Here's a list of the small banks today that took a nosedive. Just look at these stocks down 30%.
I'll read them down.
You go ahead.
PacWest. Down 30%. Western Alliance Bank. Let me know in the chat. Let us know in the chat how many of you guys use any of these banks that we're listing here. Get ready for them to collapse. PacWest, Western Alliance Bank, Metropolitan Bank down 21%, Home Street Bank down 15%, Zions Bank down 10%, KeyCorp 7%, Harbor One Bank, Citizens Financial. And then there's even more, right? Gets even worse than that.
Yeah, I think those were the dumpiest of the dumps. Yeah. Is Citizens Financial the same one that owns the Phillies Stadium?
No, Citizens Bank.
That's Citizens Bank. Okay.
I mean, I don't know if it's a parent company or something, but no.
No, I think that newsmakers and politicians are trying to pretend that these things are happening separate. Like, the bank collapses, and then the small banks, and then also the Federal Reserve rate. And then, the United States is about to hit a debt ceiling. Here's Janet Yellen warning us that the United States may only have until June 1st because the debt ceiling is currently $31.4 trillion. And the U.S., we're there. We got it. We're there by a matter of days. And so the president has asked lawmakers to meet next week. I mean, she said this on Monday. Today's Wednesday, but I guess they felt like there was no rush on that. You know, when you email somebody and you're like, I have this project.
They have to wait till Friday anyway.
Why?
They have to wait till Friday anyway. Because that's when bad banking decisions come out is Friday, so that nobody can
remember
do anything about it.
Remember the FDIC meeting where they're like, well, when we release information where your bank is collapsed, we want to make sure that it's released on a Friday so that people, they have the weekend. They can't go to the bank anyway. The banks are closed, so they're going to lose all their money. They have the whole weekend to just stew on it.
Yeah, I guess the president just like, we're going to hit the debt ceiling. I'll send an email. Hey, you guys, in the upcoming weeks, can we discuss this?
Guys, this is a huge deal. Like, I don't know how many people understand. You have all of these small banks are now being run out, and this is on purpose, right? So they're all being absorbed by the few banks, the Chase, JP Morgan Chase, the Wells Fargo, the Goldman Sachs, right? They're all being absorbed into this one massive, it's not bound by United States boundaries. It's international. And so then we will move towards this one unified currency, this one unified banking system, and we will be controlled in this way because, as we know, the meetings are upcoming where they want to move us all to a digital currency, and they want us to move to an all-digital tracking platform.
Yeah.
So this is all about control, and sad for these small banks, but this is the beginning of it. And we saw this in the pandemic with all the small businesses. It's like the same playbook over and over again.
And, when you're in an entrepreneurial world or you study entrepreneurialism, you realize that a lot of these small businesses are purposely not using a big bank because they want a relationship with their small banker, because they have more favorable products. They usually get better rates. They don't have the high fees. That's not going to be our option in short order. And it's the small banks that's pushing back against IRS regulation to report even small transactions because they don't want the headache. The big banks are like, well, government and me, we're besties. We'll do whatever you want. You want, tax reporting all the way down to $5 Venmo transactions on it. The small banks are like, you're going to crush us. And to which the government sentiment is good. That's what we want. It does very much seem that way. And now,
algebra instructor, thank you for your kind super chat. Algebra instructor says, had Key Bank Key Corp before I left the communist shithole of Washington State. Philip, you live in Washington State. Had the Key Bank Corp before I left the communist shithole of Washington State. Now everything is in my federal bank I've had since the Army. Okay, that's interesting. Yeah, and a lot of concerns I'd love to hear from other viewers as well, like about credit unions as well. Credit unions are not off the hook. A lot of why is that being kept so quiet? We've covered it a little bit here on the show, but there's been a number of credit unions. I've actually heard from people who work at credit unions who've emailed me to tell me the stories that they've been experiencing, and some of them have been fired for coming forward and making people aware of the fact that these credit unions are insolvent as well.
Yes.
And have no money and are swimming in massive debt.
So now, go ahead.
Oh, sorry if I can real quick. I was going to say the thing that really bothers me about all this, is the part where the taxpayer has put up the money to buy these banks out to like First Republic, and we bought that and then gave it to Chase for like $40 billion.
Yes.
And that's us buying this. So how many of these others are we going to? I mean, it seems like a really well orchestrated grift where basically Chase Manhattan or the Chase Bank can just take over all of these small banks without any of the risk because we're paying for it.
Yeah, I mean,
that's just because you have to understand the United States people are generous people. We paid for the vaccines and everything to be made and all that and distributed. Mm-hmm. Like we pay for everything, and we're glad to do it because it benefits us, right?
The United States loves laundering money, right? So that's what we do, right? That's what we're doing in Ukraine. American taxpayers apparently are totally fine. If you ask like American taxpayer, are you fine just funneling money through Ukraine so it winds up back in the Democratic National Committee's pockets?
Yes, but Well, I think we should make the distinction that the Federal Reserve uses wholesale money.
What does
It's a
that mean?
different
Let-
currency
explain
than we
that.
are
Yeah.
able to use. And so like their money is not necessarily taxed. Their money, like they're just using basically a super dollar, you
Right.
know?
Yeah.
And so they're able to bail out with money that is on a different level than consumer dollars. And so what they've done then is use these sort of superpower wholesale dollars, put it in a bank that's failing, and then taken everything out of that failing bank and put it over with their buds at JP Morgan Chase or
Yeah.
Goldman Sachs. And so they've taken, so this is, you know, in the same way that Edward Snowden points out that, you know, contractorship in Washington, D.C. is basically the way for the federal government to move taxpayer dollars into
Private sector.
the private sector. This is exactly what's happening here, is that they can take taxpayer dollars or, you know, United States dollars and put it into the private sector, but only to their friends, only to who they want. This is, again, the government choosing winners and losers.
Well, Janet Yellen was asked that question in that committee hearing. Remember, she was asked a week ago or 2 weeks ago, well, will you give the same protections for some of these smaller banks that are failing right now, that are under a lot of pressure? And she said, well, it's sort of on a case-by-case basis. Basically, what the president and I decide, we kind of pick and choose and who we like and who want to protect. And he's like, so what you're basically saying is no. Like, no, it's not. It's up to you to pick and choose winners. What banks collapse and which ones get the money?
Yes. Yeah. Now about this debt ceiling, because we're going to be hearing a lot more about it as it heats up, because obviously the United States will hit it. It's not like they will all of a sudden say, oh my gosh, I went over on my checkbook. I need to sort of cut some expenses and balance the checkbook. No. They're not going to do that. Republicans say they're only going to agree to an increase in the debt ceiling if it's coupled with budgets. Democrats say no budgets, no budget cuts of any kind. So they will probably duke it out and then put some things inside of this legislation to increase the debt, which will funnel money to Israel and Ukraine. Mark my words. And maybe some drag shows in Uruguay or whatever. That will be in there. What can you think of any other like fat they'll put in this bill just to
Oh my God.
get past us? Like
how do rabbits lose weight if you put them on a treadmill?
we should totally have like
I don't think Asian carp have been at in a while.
The
Asian carpet
the
bees?
invasion. No, the invasion of Asian carp.
okay.
That was a big study. Like,
Yeah.
so this is what the government spends money on.
Okay. All right. You know, debt ceiling and all. To which Carol Roth points out this issue on the debt ceiling is that they've modified the debt limit more than 100 times since the end of World War II and racked up more than 31.7 trillion. So I'm starting to think this ceiling concept isn't working. So why is it even there? You know, we invited Carol Roth on the show and she agreed, and I'm excited about that. We're going to talk to her and have her on the show in the next coming days because she does a fantastic job of pointing out these government moves and how they will affect us. Her great book, The War on Small Business During the Pandemic, highly recommend. And she's got another one coming out in the summer called You Will Own Nothing, about how this literally, she says, I thought this was a conspiracy theory at first. And when you start looking into it, you see, no, this is actually a conspiracy to take away and disenfranchise small power and melt it down and pour it into government coffers so that it is controllable power.
Thank you so much for watching this segment here at Redacted. We are live every day at 4 p.m. Eastern Time, trying to share the stories that the mainstream media will not cover. You should also come over and join our community of Redacted Rebels over at redacted.inc. That's our private locals community where we can share exclusive content that we simply cannot share here on YouTube. Come over and join the rebellion together right now by going to redacted.inc. We'll see you next time.